Hello everyone, welcome back. Tonight, we begin with a developing story that is capturing the attention of investors, currency traders, economists, and Forex market watchers around the world. The Vietnamese Dong, a currency that, for years, remained quietly positioned in Southeast Asia's economic landscape, is once again making headlines as new exchange rate movements spark intense discussion across the global foreign exchange market. Traders are closely monitoring every signal coming from Vietnam's economy, as fresh data suggests shifting momentum in the value of the dong against the United States dollar, creating new opportunities and raising important questions about where the currency could be heading next. In recent trading sessions, the Vietnamese dong has shown signs of stabilization after months of pressure from a strong US dollar environment. Market participants are paying close attention to the USD VND exchange rate, which has remained one of the most watched currency pairs in emerging Asian markets. Financial institutions, exporters, importers, and international investors are carefully analyzing Vietnam's economic indicators as they attempt to understand whether the latest developments represent a temporary adjustment or the beginning of a larger trend in the Forex market. The latest market figures indicate that $1 is trading around the 26,300 Vietnamese Dong range. While this level remains historically elevated, recent movements suggest that the pace of depreciation has slowed considerably. Analysts note that the Dong has demonstrated resilience despite global financial uncertainty, rising energy costs, and ongoing fluctuations in international capital flows. Many currency strategists believe this stability reflects growing confidence in Vietnam's economic fundamentals and the country's ability to navigate external challenges. For Forex traders, the story extends far beyond simple exchange rate numbers. Currency markets are driven by expectations, sentiment, and future projections. Every movement in the Vietnamese dong reflects a complex interaction between global monetary policy, international trade activity, foreign direct investment, inflation expectations, and central bank decisions. As a result, investors are examining Vietnam's position within the broader global economy more closely than ever before. One of the most significant factors influencing the dong remains the direction of United States monetary policy. Over the past several years, aggressive interest rate actions by the Federal Reserve strengthened the US dollar against many world currencies. Emerging market currencies faced substantial pressure as international capital sought higher yields in dollar-denominated assets. Vietnam was not immune to these global forces. However, expectations that future Federal Reserve policy could become less restrictive have altered market sentiment. Some analysts believe a softer dollar environment may reduce pressure on the Vietnamese currency and provide additional support for exchange rate stability. At the same time, Vietnam's domestic economic performance continues to attract international attention. The country has emerged as one of Asia's most dynamic manufacturing hubs. Major multinational corporations have expanded production facilities across Vietnam as global supply chains diversify. This transformation has generated significant foreign investment inflows, strengthening Vietnam's economic position and increasing demand for the local currency. Foreign direct investment remains one of the strongest pillars supporting confidence in the Vietnamese economy. Manufacturing activity, electronics production, textile exports, and technology-related industries continue to attract international capital. As foreign companies establish operations and expand business activities inside Vietnam, they create additional demand for Vietnamese dong transactions. This demand can contribute to exchange rate stability, particularly during periods of global market volatility. Another critical factor shaping the Forex outlook is Vietnam's export sector. The country has built a reputation as a major exporter of electronics, machinery, footwear, agricultural products, and consumer goods. Export revenues generate substantial foreign currency inflows, helping strengthen the nation's balance of payments position. Strong export performance often provides an important buffer against external financial pressures, allowing policymakers greater flexibility when managing currency fluctuations. Financial experts emphasize that exchange rates do not move in isolation. The Vietnamese Dong reflects broader economic confidence. When investors view Vietnam as a stable and growing economy, demand for Vietnamese assets tends to increase. Conversely, uncertainty in global markets can trigger temporary capital outflows and place pressure on the currency. This delicate balance explains why traders monitor both domestic and international developments when evaluating the future direction of the Dong. Recent market analysis suggests that the State Bank of Vietnam continues to play a central role in maintaining exchange rate stability. Vietnam operates under a managed exchange rate framework, allowing authorities to guide currency movements while still responding to market forces. Policymakers have consistently emphasized the importance of avoiding excessive volatility and maintaining confidence in the financial system. This approach has helped limit sharp currency swings that could disrupt business activity and investor sentiment. Market observers point out that Vietnam faces a unique challenge. On one hand, authorities want to maintain a stable currency environment that supports investor confidence. On the other hand, a moderately competitive exchange rate can benefit exporters by making Vietnamese products more attractive in international markets. Balancing these objectives requires careful policy management and close monitoring of global economic conditions. The latest foreign exchange market data indicates that the Dong has remained relatively stable during recent weeks, despite ongoing uncertainty surrounding global growth prospects. Currency fluctuations have become more moderate compared to previous periods when strong dollar momentum created significant pressure across emerging market economies. This stability has been welcomed by businesses that rely on predictable exchange rate conditions for planning and investment decisions. Forex analysts also highlight the importance of remittance flows. Millions of Vietnamese citizens living abroad send money home each year, generating substantial foreign currency inflows. These transfers provide support for household consumption, investment activity, and foreign exchange reserves. Strong remittance performance can contribute to greater stability within the currency market, particularly during periods of international financial stress. Investor sentiment toward Vietnam has improved as economic growth continues to outperform many regional peers. International institutions frequently describe Vietnam as one of the most promising emerging markets in Asia. Strong manufacturing output, expanding exports, rising consumer demand, and continued infrastructure development have reinforced positive expectations for long-term growth. These factors contribute to a broader narrative that supports confidence in the Vietnamese currency. Nevertheless, risks remain. Global financial markets continue to face uncertainty from geopolitical tensions, commodity price fluctuations, and shifting monetary policy expectations. Any sudden strengthening of the US dollar could renew pressure on emerging market currencies, including the Vietnamese Dong. Traders understand that exchange rates are influenced by global developments that often extend far beyond national borders. Oil prices represent another important variable. Higher energy costs can affect inflation, trade balances, and economic growth prospects. Vietnam's policymakers must consider how rising commodity prices could influence domestic financial conditions and exchange rate dynamics. Market participants continue monitoring these developments closely as they assess future currency trends. Across Forex trading desks, discussions increasingly focus on whether the Dong could experience a period of stronger performance if global financial conditions become more favorable. Some analysts argue that declining dollar strength combined with robust foreign investment inflows may create a supportive environment for the Vietnamese currency. Others remain cautious, emphasizing that external risk continue to dominate global market sentiment. Technical analysts studying exchange rate charts note that recent price action suggests a period of consolidation. Volatility has moderated, and trading ranges have become narrower compared to previous months. While technical indicators alone cannot predict future outcomes, many traders view these developments as evidence that the market may be searching for a new equilibrium. Financial institutions across Asia are increasingly incorporating Vietnam into long-term investment strategies. Portfolio managers cite demographic advantages, industrial growth, and expanding consumer markets as key reasons for maintaining exposure to Vietnamese assets. This broader investment interest supports demand for the Dong and strengthens Vietnam's integration into international financial markets. Meanwhile, businesses operating within Vietnam continue adapting to evolving currency conditions. Exporters carefully manage foreign exchange exposure, while importers monitor costs associated with dollar-denominated transactions. Financial planning has become increasingly sophisticated as companies seek to minimize currency-related risks and maintain competitiveness in global markets. The broader significance of the Vietnamese Dong extends beyond Vietnam itself. Currency performance often serves as a signal regarding economic confidence, investment attractiveness, and financial stability. As international investors search for opportunities in high-growth economies, exchange rate trends provide valuable insight into market expectations and risk perceptions. Recent forecasts suggest that moderate exchange rate movements are likely to continue rather than dramatic swings. Several analysts anticipate that the Dong will remain relatively stable, provided external conditions do not deteriorate significantly. Expectations of gradual, rather than abrupt adjustments have contributed to calmer market sentiment compared with previous periods of heightened volatility. The international Forex market remains highly sensitive to economic data releases. Inflation figures, employment reports, manufacturing surveys, and central bank communications can all influence currency valuations. Vietnam's economic indicators are therefore receiving increased scrutiny as traders attempt to identify signals regarding future exchange rate direction. One noteworthy development is the growing sophistication of Vietnam's financial sector. Banking institutions have expanded capabilities, financial markets have matured, and regulatory frameworks continue evolving. These improvements enhance market confidence and support the country's long-term economic ambitions. For ordinary citizens, exchange rate movements can have real-world consequences. Changes in currency values influence import prices, travel expenses, education costs abroad, and purchasing power. Businesses may experience shifts in profitability depending on their exposure to international markets. Investors likewise monitor currency trends when evaluating portfolio performance and future opportunities. The Vietnamese government continues emphasizing economic modernization, infrastructure investment, and international trade expansion. These initiatives are designed to strengthen long-term growth potential and enhance Vietnam's competitiveness within the global economy. Successful implementation could further support confidence in the Dong over time. Market observers note that Vietnam's economic transformation over the past decade has been remarkable. Rising incomes, expanding industrial capacity, increasing foreign investment, and deeper global integration have fundamentally changed perceptions of the country's economic potential. As a result, the Vietnamese Dong is attracting greater attention from traders who previously focused primarily on larger regional currencies. Looking ahead, several scenarios remain possible. If global economic conditions improve and dollar strength moderates, the Dong could benefit from renewed investor confidence and stronger capital inflows. If external risks intensify, authorities may face renewed challenges in maintaining exchange rate stability. Much will depend on developments within international financial markets and broader macroeconomic trends. What remains clear is that that the Vietnamese Dong has become an increasingly important currency story within the global forex market. Investors, traders, policymakers, and businesses are all watching closely as new developments unfold. Exchange rate movements that once attracted limited international attention now generate headlines across financial media platforms and trading communities worldwide. As the latest trading week comes to a close, market participants remain focused on incoming economic data and central bank signals. Every new report has the potential to influence expectations regarding future currency performance. The forex market never stands still, and the Vietnamese Dong continues to occupy a growing place within that constantly evolving landscape. Tonight's developments underscore a broader reality shaping global finance. Emerging market currencies are no longer viewed solely through the lens of risk. Increasingly, they are evaluated as indicators of economic transformation, investment opportunity, and strategic importance. Vietnam's growing role in international trade and manufacturing has elevated the significance of its currency far beyond regional boundaries. For now, traders will continue monitoring the Dong's performance against the US dollar, searching for clues about future direction. Whether the current stability evolves into sustained strength or remains part of a longer adjustment process, one thing is certain: the Vietnamese Dong remains firmly in the spotlight of the global foreign exchange market. And the world is paying attention.